Hello, today we are solving Jan 2025 paper question number 4, unit 2. Okay, D, part D, evaluate which of the two companies would make the best investment for Karina. So earlier in the part 1A, okay, in the part ABC, we had calculate what was the dividend per share issued by the two companies. We had also calculated what is the dividend yield that was issued. Okay, we had calculated dividend per share, dividend yield, and dividend cover. Okay, these are the three important ratios she had calculated based on the information given. Okay, for the two companies. Now let's understand which is the best investment for Karina to make based on these three ratios. So let's for we have seen that the dividend yield for Aquarius was at 1.3 percentage, and it was slightly higher than BelleStar, which was around 0.83 percentage. So the difference is around 0.47 percentage. Okay, so Aquarius PLC is giving a higher dividend yield. And now let's discuss what is the yield. Dividend yield is the most important of the three ratios we had calculated. So it is going to tell the investor the return they will get for every pound invested as it takes the market price of the share into the account. The current market price it takes into the account. So which means that for every pound invested, okay, Aquarius PLC is giving a dividend of around 1.3 percentage, means for every 1 pound invested at least 1.3 percentage you are getting a dividend, whereas BelleStar PLC is only giving 0.83 percentage. Okay, then next ratio we had calculated was the dividend cover. Even the dividend cover for Aquarius PLC was 2.3 times, and we had seen that it is taking, which means profit after interest and tax can cover the dividend paid more than twice, so it can give further dividends also. So the profit, so enough profit is generated by the Aquarius PLC to give a dividend. Okay, it has more profit to give at least twice that was issued as dividend. So this indicates a safer dividend policy than BelleStar, which has a dividend cover of only 1.8 times. So even the dividend cover was higher for the Aquarius PLC. So next, let's see if the blue BelleStar had any positive financials. So, and which makes it best for the investment. So here we can see that BelleStar PSE is going to pay a dividend of 3.45 pounds per share, which is higher than the dividend of 2.86 pence per share paid by Aquarius PLC. Okay, so the dividend per share paid by the BelleStar seems to be much higher. So, and also BelleStar has a lower dividend cover means necessarily that, which means that it pays a dividend share to the shareholders. A greater proportion of the profit is being paid. So if it is a dividend cover is higher, it means this company has enough profit. But this also means BelleStar is paying a greater proportion of the profit to the company shareholders as dividend than BelleStar, okay, than Aquarius PLC. So BelleStar has a more generous dividend policy. Okay, this is a safer dividend policy because we feel that they have enough profit to give dividend. Okay, for Aquarius PLC. Now, the lower dividend for BelleStar also means that they have a more generous dividend policy. So, BelleStar has a greater figure for profit, which is around 37286. We had calculated the profit earlier in one of the calculations. Okay, so the profit was calculated after the tax and the interest. Okay, after the tax and the interest was given. So, which means that was around 376. Okay, it was 3,726,000 compared to this Aquarius PLC, which is the around 1,973,400. So this has a greater profit. Okay, also we are seeing it has a greater profit and it has a more generous dividend policy. So these are the positive aspects for BelleStar PLC. Now, Karina can also look into other factors such as ethical or environmental factors. Is the company following of which there is no mention here. But in conclusion, it can be argued that Aquarius PLC is a better investment for Karina as the dividend yield is higher, and we have discussed this is one of the most important ratios which we have to consider, because it tells the return they are going to get, okay, a shareholder is going to get, because it takes into account the current market price.